Hi guys, a warm welcome to each and every one of you in the today's session. So I'm CA Rahul Garg and you are at our Rahul Shikha Academy YouTube channel. If you are new to this channel, please press the subscribe button and hit the bell icon. As you must be knowing, these days we are having our Manzil batch, which is 100% free of cost MCQ focused batch, whereby we are taking the multiple choice question sessions for the three subjects, that is CA intermediate. The first one is advanced account, the second one is costing, and the third one is FMSM. So in each session we are taking 20 questions which are purely MCQ, which contains some of the theory, some practical part, and even the case studies which are being asked in the examination these days. We have already done some of these sessions and the balance session shall be completed before the 31st of March 2025. There are total of 15 sessions, out of which we have we have done almost 7 sessions. So today is the next session, and the next session is of the subject financial and strategic management, in which we will talk about the FM part. So for FM we were having total of 3 sessions. First and second is done already, and the third we are going to do it today. With respect to fourth and fifth session, so those belong to the strategic management. Okay, so I once again welcome to each one of you. Come on guys, if you are here, just first of all press the like button so that I can understand, I can get to know, I can feel the vibe of all of you. So come on, without wasting any further time, we are going to start with the today's session. We are going to start with the today's session. Come on, child. So as you can see, so I make always the standardized kind of notes, and over here you can also see each and every session of our Manzil batch starts with this screen only, whereby we get in detail, we see in detail Manzil batch for all the 3 subjects, and after that the details of the particular session are given. So this is the FMSM and the session number 3 of this particular subject. Over here the chapters covered are also given, that what are the chapters which are being covered in this particular session. So we'll see it quickly. So first is sources of finance. I told you in the last session of financial management there are mainly 2 chapters which are purely theoretical based in the financial management. One is the scope and objectives of FM, which we took up in the last lecture, and there is one sources of finance. So in this chapter there are the details basically, that which are the various sources, what are the various sources from where the company can raise the amount to fund its various kind of operations and expansion decisions, etc. And other than that, our today's focus will be strictly and entirely on the working capital, whereby we will see estimation of working capital, operating cycle concept, debtors management, somewhat related to cash management, and even few questions with respect to the working capital finance. So it is going to be overall 360-degree coverage of the chapter working capital management, along with few of the questions of the chapter sources of finance. We have seen in the examination which have been taken in the new syllabus, under the new syllabus till now, that the ICA is not focusing on the theoretical questions with respect to the MCQ. So on MCQ there is a focus only on the practical question, but still we don't want to miss out anything. So we are going to do even this chapter from the MCQ point of view, that is sources of finance. So I once again welcome Puttar. Let's start with the today's session. Bolo tararara aha. Come on ji. ਤਾਂ ਸਾਡੇ ਕੋਲ ਪਹਿਲਾ ਕੁਐਸਚਨ ਆਂਦਾ ਹੋਇਆ ਹਾਂਜੀ. So question number 1 says as follows. So what you will do, once I read the question, so you will guess out of ABCD and you will write in the comment section, so that we can understand that where do we stand. Okay, even if it's wrong, doesn't matter, we have to be correct in the examination. Okay, come on ji. So the first question over here, dash means raising the money for an individual or an organization from a group of people to fund a project, typically via internet. So what is it saying? So it is saying dash means, what is it called? What is this phenomenon called? What phenomenon? Raising a money. You want to raise the money for either an individual or an organization. You want to raise the money from it says a group of people. Why you want to raise the money? To fund a project, typically via internet. So it says that we are not going to have that traditional public issue, etc. No, we want to raise the money over the internet. So sometimes when you're scrolling through the social media, suddenly a pop-up comes on the screen whereby it is shown that, for example, this is the organization, they want to raise the money, or it is shown that, for example, this is a particular child suffering from a particular disease and the treatment cost is this much rupee, but the parents are not able to afford that much of sum of money, so they ask you to pay whatever you want to contribute to that cause. So this phenomenon, what is it called? So the students are answering A. Let us see. Okay, so the options are crowdfunding, ADR, American Depository Receipt, GDR, Global Depository Receipt, and Eurobond. So these all are irrelevant option. The relevant option is crowdfunding. So this is the answer to this question number one, child. So all of you are absolutely correct. All of you are absolutely correct, Ji. Next question. So if you are live on this, or you are seeing it, or you are watching this lecture later on, because even after being live, it will be on the YouTube as well. So please don't forget to hit the like button. Yeah, question number 2. It says external commercial borrowings, popularly it is called as ECB. External commercial borrowings can be accessed through. So what is this ECB? For example, as we are in the country India, if I want to raise the money from the bank, I will go to any commercial bank and I can apply for the loan and I can get the loan. So that is one route of raising the money in my own country. But for example, I want to raise the money from the bank of another country. In that case, we have something called ECB, which is called as external commercial borrowings, right? So it is saying the external commercial borrowings can be accessed through either the automatic route, or you have to take the approval. So first option is saying you can go only through the automatic route, there is no approval. But the option B says no, there is no automatic route, only approval route. And the third option says it can be automatic as well as the approval route. And the D option says you cannot get the money from the foreign country via ECB, either automatic or approval. So neither automatic nor approval, you cannot get the money. So which option is correct? What do you think? The option number C is correct, both automatic and approval route. So there are the cases written. In few of the cases you can go automatic via the automatic route, means you need not take the permission. But there are certain cases in which you have to take the permission of the RBI if you want to get the money from the foreign country. Those cases are not in our syllabus. Okay, you just have to remember that both the routes are there. In some cases the automatic route will be applicable, and in the other cases the approval route shall be applicable, child. Very nicely. The child who gave the answer, Jasprit Singh Gulati. ਗੁਲਾਟੀ ਸਾਹਿਬ ਤੁਹਾਡਾ ਆਨਸਰ ਬਿਲਕੁਲ ਠੀਕ ਹੈਗਾ ਹੈ, ਕਮ ਔਨ ਜੀ। ਕੁਐਸਚਨ ਨੰਬਰ 3 ਸਾਡੇ ਕੋਲ, this bond gives the issuer the right to redeem the bond before the maturity at a predetermined price. So what does it want to convey? What does it want to say? Let's say, so this is the timeline. Over here the company issued the bond, and let's assume the life of the bond was 10 years. But this question is saying this particular bond gives the issuer, means company, the right to redeem the bond before the maturity. For example, after the end of 6th year, the company is sending an email to you that Mr. Rahul or Mr. So and so I want to return your money, just give me my bond back. So first of all, is it possible? Definitely yes, it is possible. If this is possible, what will this particular bond be called? Either the callable bond or puttable bond, or FCCB, means foreign currency convertible bond, or none of the above. The correct option is, child, callable bond. Callable bond, where the issuer can call the bond. So that is called as the callable bond, where the issuer has the right to redeem the bond even before the maturity. So you have to remember this. These are very good important MCQs. Come on ji, next question. Sadekol. It says the samurai bonds are denominated in which currency? So there are various kind of bond, Yankee bond, samurai bond, high yield bond, etc, etc. So it says particular samurai bonds are denominated in which currency? So 4 currencies are given, either Indian rupee, or the Japanese currency, which is called as Japanese yen, JPY, US dollar, or euro. Samurai bonds. So just visualize. For example, I remember my childhood. So when we used to see someone called samurai, so immediately in our mind the Japanese person used to come in mind. So I know mine. I don't know how you are going to see that, but yes, whenever we say samurai, so Japan is connected with samurai. So the answer is Japanese yen. The answer to this question is Japanese yen. Pallav Agarwal and Ananta Kumar have given the right answer. Very fine, very fine. Chaliye. Let's move to the next one. So one more question from this chapter of sources of finance. After that we will have the case study. It says in finance lease, life of the contract approximates the dash of the asset. We know there are two types of lease, operating lease as well as the finance lease. You study this in the accounts as well in the AS number 19. But yes, this is again the source of finance as well. So in finance lease, it is saying the life of the contract. For example, I am the lessor and the child who is watching my lecture is the lessee. So in finance lease, when I am giving you the right to use the asset for dash years, what is that dash year? What is the life of our contract? It says life of contract approximates the dash of asset. Either the answer is economic life, or residual life, or total life, or none of the above. So residual life obviously not the answer. The students get generally confused in economic life and the total life, because generally the life of contract covers the total life. So they get confused between the economic and the total life. But the correct answer, child, over here is economic life. यही है right choice, baby. यही तो है right choice, baby. Yeah. So this is the answer to question number 5. And all the students who are watching the lecture, if you don't know where you will get the PDF, so you will get the PDF on our Telegram channel. Right after the session, I will post this particular PDF in which the answers are also marked. Okay, come on ji. Next question from the chapter working capital management, estimation of working capital, specifically from the concept of operating cycle. Very important question has been asked as it is in the examination more than 2 times. Okay, let us see. Let us see, child. So it says the following information is provided by the DPS Limited for the year ending 31st of March 2013. So it says raw material storage period is 55 days, WIP conversion period is 18 days, FG storage period is 22 days, debt collection period is 45 days. So these all are the time period of various components of the current assets. Then it says creditors payment period means you are talking about the current liability. So 60 days period is given by your creditors to you. Then it says our annual operating cost is rupee 21 lakh, but bracket says be cautious, it includes the depreciation of 2 lakh 10,000. So out of 21 lakh rupee total expense, 2 lakh 10,000 is the depreciation, and we know that depreciation remains irrelevant for the working capital management chapter, because specifically if the depreciation is given, the question will put the name of cash cost approach. And it also says that you have to consider 1 year as 360 days. So wherever you have to take the number of days in a year, as the question has specified 360, so please don't take 365 or any number of days, as per of your choice. So it says from the above details answer question number 6 to 9. So 6, 7, 8 and 9, there are 4 questions specifically belonging to this particular data. Let us see one by one, child. First of all, it says what is the operating cycle period. So when the question is operating cycle period, it simply means you add up the time period of the various current assets, and from that you deduct the time period of the current liabilities. So what we will do, we will add all this 55 plus 18 plus 22 plus 45, 55 plus 18, 22 and 45. Out of that deduct 60. So it comes as 80. 80 days is the correct answer. So option B, child, option B, 80 days, this is my correct answer. And as I keep telling you in each and every session, be it of any subject, advanced cost or FMSM, whenever I give certain data and on the base of that data certain questions are to be answered, so that is also solved in detail. After all the 20 questions, I give the detailed solution. So you can see this is for answer number 6 to 9. Okay, so first part we have done, the first question, that the answer is 80 days. So you can see I have marked it over here. Now coming to the next question, based on this data, it says what are the child number of operating cycles in a year. In the first part we said that 80 days is the operating cycle period. It simply means that one operating cycle is of 80 days, or I can say in this manner, 80 days comprise one operating cycle. The question is asking how many operating cycles are there in a year. So you tell me, if 80 days constitute one operating cycle, and in an year question said that you have to take 360 days. So in 360 days, how many operating cycles shall be there? So 1 upon 80 into 360, you will get your answer as, I think it should be, yeah, it should be 4.5. So option B, child, becomes the correct answer. Very nice. Ananta Kumar has been very active today, have been giving the correct answer. Or if you want to see over here, as I told you, I have given the details as well. So you can see the answer as child 4.5. The next question, if we see, question is asking what is the amount of working capital required for the company on a cash cost basis. So cash cost basis simply means that you have to reduce this 2 lakh 10,000 out of this 21 lakh. So when you reduce that, it will become 21 minus 2 lakh 10,000, 18 lakh 90,000. So this is my operating cost, but this is the cost on an annual basis for the full year, right? This is the annual cost, and I have to find, question says amount of working capital. So in a year there are 4.5 operating cycle. I need the amount equivalent to one operating cycle only. So you can see over here, this is the answer. So total cash cost is 18 lakh 90,000, and this is for the full year, and in a year there are 4.5 cycles. So the amount equivalent to one cycle shall be my amount of working capital, child, that is 4 lakh 20,000. I hope it is absolutely understood and correct. Come on, Ji. The last one relating to this case study is, okay, we will first of all mark this. The answer was 4 lakh 20. What was the answer? Was it 4 lakh 20,000? Wait. Yeah, it was 4 lakh 20,000. So we will mark this over here and then move ahead. 4 lakh 20,000 rupees. So these are going to be very handy at the time of examination preparation in the last days. Okay, one more question relating to this case study, child. So it says the company is a market leader in its product and there is virtually no competitor. So we are the leader, there is no competitor. Based on the market research, it's planning to discontinue sales on credit. When you don't have any competitor, why are you selling the goods on credit? If you see the question, it gave you this period, debt collection period of 45 days. Means once you are selling, the persons to whom you are selling the credit sale, those are taking 45 days, and after that period the amount is coming to you. But when there is no competitor, you can simply say, boss, I will not sell on credit, only cash sale. So that this 45 days time period, as of now, the amount of sales is blocked in the debtor for 45 days, but I can make it free immediately by saying that I only accept the cash sales, I will not sell on credit. So that's the thing the question is saying. So it says the company is planning to discontinue the sales on credit and deliver the products on prepayment. They are saying we will take the payment in advance rather than now taking later on. Thereby, it can reduce the working capital requirement substantially. So the question says, what would be the reduction in working capital due to this decision? So what would be the reduction? What you have to do? You have to find the operating cycle again, operating cycle period again, taking this 45 days as zero now, means ignoring this. So only three current asset, 55 plus 18 plus 22 and minus 60. So you will get the operating cycle. So sorry. So you will get the new operating cycle, and on the base of that, you will get the number of operating cycle, and then you will get the amount of working capital. If there is no debt period, then you have to find out the amount of working capital. But this is not the thing which the question is asking. It is asking what would be the reduction in working capital. So for example, earlier my amount was 4,20,000. This was needed. But when I will start selling without the credit, without giving the credit of a single day, in that case, you will find your working capital. So this is old working capital. This is new working capital. The question is asking what would be the reduction. So this is going to be my answer. So you have to be very sure that you do it correct. Okay. So I'll show you the answer in detail. So first of all, you shall find the new operating cycle period, leaving apart this 45 days of debt collection period. So we will take the other period, raw material WIPFG, and out of that we will deduct the debtor creditor time period. You will get 35 days. 360 days are total in the year. So you will do 360 upon 35, child. It will come as 10.29 cycles. And in the year, there is a operating cost of cash cost operating cost of 18,90,000 divided by the number of cycle. Means this is the amount of working capital which you need, 1,83,673. So this is a new working capital. The old one was 4,20,000. The new is this. So this has been the reduction, that is 2,36,327 rupees. Now ICAI will definitely give this figure as well in the option, because many students will just mark this as the correct answer, but you have to be very careful. The question is asking what would be the reduction in the working capital. So that's 236,327. So this was the answer to question number 9. See guys, so this is the correct answer, 2,36,327 rupees. Very correct and very nice for all those students who give the answer correct. Okay, so one question relating to the working capital finance. This chapter, though not very important, but its fundas are very good to understand. Sometimes you may encounter this in the examination. So investment in working capital, it says, is kept at the minimum investment in current assets in which approach. So there's a chapter working capital finance. Even when the students study from me, we do at least one question, minimum one question of this concept in regular as well as the fast track batch, where we say that whenever you have to see that how much working capital you should keep with you, right? In that case, there are three approaches. There are three approaches: aggressive, moderate, and conservative. So it depends upon each and every organizational philosophy what amount of working capital they want to have. The ones which are conservative, So they want to, they conservative means they are always afraid that this adverse situation may happen. So they always at any cost want to avoid that situation, for which they invest heavily in the current asset. For example, I am a trader. For example, I have a particular grocery shop, right? So the person comes and they may ask for the shampoo of Sunsilk, they may ask for the shampoo of, let's say, Pantene, and they may ask for the shampoo of Head and Shoulders as well. Okay, so what I will do, if I'm conservative, I will keep all the three shampoo and I will invest heavily in the current asset, because what this is nothing but the stock. So I am investing in the stock. I am keeping 50 bottle of Sunsilk, 50 of Pantene, 50 of Head and Shoulder, considering a lot of customers may suddenly come. And what if they come and I don't have the stock? So I will keep adequate stock. Whereas the aggressive one says, no problem, Sunsilk, Pantene, Head and Shoulder. So it says the major one which is in the market today accepted, that is Head and Shoulder. So it has kept 30 pieces of this, 15 of this. So aggressive one is thinking, even if the stock of Sunsilk and Pantene is over and a particular customer comes to take the Sunsilk, I will ask him to go for Head and Shoulder, citing various reasons, this and that. So as compared to this person who has invested in 150 bottles, I have invested only in 60 bottles. So this person is aggressive. So it is this type of organization keeps the investment in current assets at the lowest level, so that your amount don't get blocked. So this is the thing the question is asking. Now let's read it again. Question says, investment in working capital is kept at minimum investment in current asset. Minimum investment in current assets in which approach? So I told you aggressive. So the aggressive is the answer. The minimum investment in current asset is done by the aggressive approach person. Should be absolutely clear, guys. Just check this. Okay, moving to the next one. One more question relating to the working capital finance, and this is again a wonderful one. Lot of students do not know about this. It is generally financed by the long-term source of finance. So normal theory says the long-term source of finance are used to finance, are used for the long-term assets, that is the fixed asset, machinery, furniture, building, land, etc. Whereas the short-term source of finance is used for the short-term asset, but that's not absolutely and actually correct. Even out of your working capital, there is certain part of working capital which is always permanent in nature, means it is to be maintained at any cost and all the times, irrespective of your business activity. That is called as the permanent working capital. So permanent working capital is that particular part of the total working capital which is to be financed by the long-term sources of finance. So the correct answer is permanent, not the temporary and not the total working capital, child. Come on. Next question, question number 12. It says, following is not a spontaneous sources of finance. So there are sources of finance, certain some sources of finance are spontaneous, means when you do a business transaction, it becomes your source of finance. But then there are certain sources of finance which are not spontaneous. For example, I have to go to, if I want to take the loan from the bank, I have to go to the bank and avail the loan. And this whole procedure obviously will take certain period of time. So that's not a spontaneous source of finance. Whereas, for example, I say that I have bought the goods from Mr. A and I don't have to pay him right now. I have to pay after 30 days. So it becomes my source of finance because I have got the goods, but I need not pay the money. So it's a kind of source of finance. Question is asking, following is not the spontaneous source of finance. So trade credit is a spontaneous source. Bills payable is a spontaneous source. Accrued expense means I have incurred the expense, but I have not paid the money, right? So that is again a spontaneous source of finance, because you have not paid the money, but you have taken the service. For example, I am having the employees in my organization. I don't pay them the salary on the daily basis. Month is over, and after the end of the month, in the next 7 days, I have to pay the money, right? So means that expense is accrued. So these all are the spontaneous sources. The one which is not the spontaneous source is the bank loan. So bank loan, child, becomes the correct answer. This is your correct answer. Question number 13, again a good one from the cash management. It says, as per Keynes, as per Mr. Keynes, you study in economics, na? Keynes theory. As per Keynes, cash is required for. So Mr. Keynes said the cash is required for three motives. One is transaction needs. For doing the transaction, for speculation needs, you may encounter some opportunity whereby by investing certain amount you can probably increase, you can probably earn a very good return. So that is speculative need. And for the precaution, it means for emergency, etc. So these three are the correct answer, but obviously we can't mark all the three. So the correct option is D, that is all of the above, because it encompasses all the three type of need: transaction, speculative, and the precautionary as well. So now one practical questions comes over here. Child, question number 14. VK Company Limited has the total cash disbursement amounting to rupee 22.5 lakh in the year 2017. So this question was asked in examination 2 times. And it maintains a separate account for cash disbursement. Company has an admin and transaction cost of transferring cash to the disbursement account rupee 15 per transfer, and the yield rate on marketable securities 12% per annum. So a fit question to find out the optimum cash balance, where we need the three things: A, T, and C. A means annual amount of the cash, annual requirement of the cash. T means the transfer cost or the transaction cost, and C means the carrying cost. So annual cost, total cash disbursement is given as 22,50,000 for the full year, means this is A. This is your T, 15 rupee per transfer, and this is C, 12%. It says you are required to determine the optimum cash balance as per the Baumol model. So very easy, 2 into A into T divided by C. So you can see the A annual requirement is 22,50,000, T is this and C is this. In the formula you will put 2 into A into T upon C, and doing under root you will get the answer is 23717. So the option having this 23717 against it is the correct answer, child. So 23717 becomes the correct answer. Moving further, question number 15. It says the term net 50. So where is this term used? When you do the chapter debtors management, over here, over there you encounter certain questions where this thing is written. For example, 1 by 15 net 30. Right. So what is the meaning of this net 30? It is asking. The term net 50 implies that the customer will make the payment. So these are the options. Either does it mean the customer make the payment on the 50th day, or before the 50th day, means up to the 49th day, or not later than 50th day, or none of the above. So the correct option is, child, option C, not later than 50th day, means the maximum time period which has been granted by us is 50 days. So he has to make the payment anyhow by the 50th day. Even on 50th day is fine. Okay. So next question says the system uses the human operators and a computer based system to allow the customers to make the payment over the phone. So various options are given. Does it mean direct debit or IVR or NEFT or RTGS? So what is the system whereby it says the system uses the human operator and a computer based system? Means you make a particular call, and over there the certain instructions are said and you follow those instructions and you can make the payment. So that is called as the IVR facility. That is called the IVR facility. So this was question number 16. Now last 4 questions are related to this study, which is from the chapter data management, one of the very important concepts of factoring. Okay, so let us read it and do it. It says a firm A Limited has a total sales of 3.20 crore, or if in lakhs I can say 320 lakh. Its average collection period is 90 days. So this is the total sale, means this is the sales per annum, out of which the amount equivalent to 90 days remains as a debtor at any point of time. The past experience indicates that the bad debt losses are 1.5% on sales. The expenditure incurred by the firm in administering its receivable collection efforts are rupee 5 lakh. So there are two kind of things. When you are yourself managing your debtor, there is a bad debts of 1.5% of the sales, and admin cost of rupee 5 lakh rupee you are incurring. It says a factor is prepared to buy the firm's receivable by charging 2% commission. So a factor has come forward. He says that, boss, I will take care of this, but I will charge 2% commission. And the factor will pay the advance on receivable to the firm at an interest rate of 18%. He will charge the rate of 18% after withholding 10% as reserve, and 10% he will keep it reserve, which he will give later on. So this is not the expense. This is just the time value of money. Means he will retain this amount as of now, and later on he will give it to give this amount of reserve to us. So from these details, it says you have to answer number question 17 to question 20. So these 4 questions are to be answered on the base of this data. What are the questions? So it says what is the net amount given by the factor in advance? Net amount given by the factor. So first of all, what you will do, out of the total sales, you will find out the amount of debtor, means the sales equivalent to 90 days. From that you will deduct this reserve and this commission. You will get certain amount, means this is the amount which the factor is ready to give to you, but from this amount he will deduct the he will deduct the interest because he is making the payment to you in advance, whereas he will get this payment later on from the debtor. So in this manner it is to be solved. See, I have done it fully. I have solved this question in detail. Let us see, child. Okay. So net amount given by factor in advance. First of all, we will say average debtor. So you will do 320 lakh means the sales of the total full year into 90 upon 360, you get 80 lakh. From that, commission of 2% shall be deducted. 80 lakh into 2%, 1 lakh 60,000, and the question said reserve, he will take 10%. So 80 lakh is the amount of debtor into 10%, 8 lakh he will keep as reserve. The balance amount 80 minus 1.68 becomes 70.4 lakh, and this is the eligible advance. Oh, sorry. Eligible advance means this is the amount which the factor is ready to give to you. This is the amount which the factor is ready to give to you, but he is giving you now and he will get it later on. So he will deduct the interest from this. So 70 lakh 40,000, the rate of interest per annum is 18%. It is per annum, but he is not giving you for the full year. He is just giving for this time period, that is 90 days. After 90 days, he will get the money. So he will charge me the interest only for 90 days. So this amount comes as 3.168 lakh, and reducing it, you get the value, child, 67.232 lakh. So 67 lakh 23,200 kaka. Okay जी. एक कक्का आया है, पुछदा है, the student is asking whether it is live or recorded. It's absolutely live. Come on ji. So the correct answer is 67 lakh 23,200. The other two options are not correct. Other three options, I should say. Okay, the next one. So it says, what are the savings due to factor? Savings due to factor means when factor comes into picture, the cost which I was incurring, I need not incur. What were the cost? There was one admin cost of rupee 5 lakh, it said, and there was one bad debt of 1.5%. So 320 lakh is the sale, and 1.5% is bad debt, means 4 lakh 80,000. So 4 lakh 80,000 bad debt and 5 lakh admin cost. So total saving of mine will be 9 lakh 80,000 if I give this whole contract to Mr. Factor. So 9 lakh 80,000 is going to be the correct answer, child. So 9 lakh 80,000. Whenever the question asks about the savings or the cost, it will always be on the annual basis. Then it says, boss, what are the cost due to the factor? Obviously, if I'm giving the contract to the factor, then there are certain costs. What are the cost? We can get the at least the nature of the cost from this. So it says he will charge the commission 2%. So this is one cost, and then there was one interest. Sometimes the students get confused. They say, sir, reserve is also the cost. No, reserve is not the cost. I told you while reading the question as well that reserve is the amount which the factor is keeping today with him, but after 90 days, whenever he will get the amount from the debtor, he will give me that money. So it is not the cost. There are only two costs. One is commission and the other is interest. And very interesting, I told you that whenever the analysis of expense or saving is being made, it will be done on the annual basis. So what is the sales for the full year? 320 lakh. He is going to charge 2% commission of that. So 320 lakh into 2%, 6 lakh 40,000 is the cost of the commission, and the other cost is interest. So when we computed over here, the interest was 70 lakh 40,000 into 18%, but for 90 days. If I want to find for full year, I have to just take this portion, 70 lakh 40,000 into 18%. This is for the full year. Means if I leave this time period, 70 lakh 40,000 into 18%, this is the per annum interest cost. So it comes as 12 lakh 67,200, and you do the total, child. So the cost is 19 lakh 7,200. Okay, so this becomes our answer. Let us go and mark the correct answer. 19 lakh 7,200 is the cost due to factor. The last question relating to this study and of this session is, it says, what is the effective cost of the factor? So you have found out the savings and you have found out the cost as well. Now it wants us to do a net analysis. What is the net cost? So this is the cost and this is the saving. What is the net cost? So you have to deduct the savings from the total cost. As simple as that. So my cost is this 19 lakh 7,200, whereas my savings are 9 lakh 80,000. So if I do the netting, I get this value as 9 lakh 27,200. So child, this becomes the net effective cost. So option B, 9 lakh 27,200 is the correct answer. So with this, our session number 3 of FMSM is also complete. I hope all of you have enjoyed the session. It is going to be very enriching. Even if you join late, I will advise you to see it fully later on as well. Okay, and the notes which have been used in the session are going to be on the Telegram in the next 5 minutes. With this, I wish you all a happy learning and see you all in the next session. Ji. Bye bye. Good night. Shabba Ratri and शब्बा शब्बा रात्रि बोल दिया मैंने, शुभ रात्रि एंड शब्बा खैर। मैं सोच रहा था कोई बच्चा पकड़ेगा, किसी ने पकड़ा नहीं।